Hello and welcome. This is All You Need to Know. I'm Agam Akil. Well, let's start by taking a look at the global markets. At this point in time, what we're seeing was, mixed cues coming in from, a lot of the whole host of your indices. So if you take a look at some of your American indices, mixed cues coming in, but, something like your S&P BMV IPC, that's down as much as 5.8%, and that perhaps could be critical. But mixed cues coming in from Europe too, not too much to speak for, though, your variation wasn't beyond a 0.5%. But when it comes to your Asian indices, at this point in time, Hang Seng is trending down by as much as 1.8%, about a near 1% cut for the Nikkei as well. And that's the reason why you're probably seeing the SGX Nifty trend lower as well, because the SGX Nifty at this point in time is indicating a cut of a little over 20 points. But let's move in, take a look at how the American depository receipts have done. And as you can see on your screen, all of them have declined in trade, with the most cuts coming in for Wipro and Dr. Reddy's. Not too much to speak for among the other set of American depository receipts. So you have Tata Motors and HDFC Bank also declining in trade to a certain extent. But let's move in and take a look at how our markets did on Murat trading day. It was just a 1-hour session, so we don't expect too much to come in through volumes or turnovers. But the Nifty did advance by as much as 0.7%. The mid-cap and the small-cap indices also largely moving in tandem with the broader markets. It's the same for the Nifty Bank as well as the Nifty Banking PSU index as well. Advances coming through, as well as other sectoral gainers with Nifty IT and Nifty Metal leading the charts. But let's talk about your foreign institutional flows. And again, because it was a very small session, we really didn't have too much coming in from foreign investors or, for that matter, domestic institutions. But moving on, let's take a look at your contributors. And again, it was essentially your large cap stocks like Reliance Industries, TCS and ICICI Bank holding the gains. On the other hand, what was bearing down on the indices was weakness in SPI, Axis and ITC. How did the futures and options segment pan out? Again, very quiet. There was less than 1% increase in open interest for the Nifty futures. The Nifty banking futures also saw just a little over 1% increase in OI. In terms of open interest distribution, towards the lower end, your maximum open interest remains with the 10,200 put. On the higher end, it is with the 11,000. However, we do have some significant accumulation around the 10,700 call as well. So that's the near-term resistance on the upside. In terms of what happened in changes in open interest, it was more unwinding coming through around the 10,700 call, and for the 10,600 put, which saw more writing coming on. But let's talk about some of those other variables, such as the put call ratio for the Nifty, which was largely unchanged at around 1.59. The Nifty banking put call ratio fell to around 1.11. And in terms of stocks, again, a whole host of stocks that we are watching out for, but let's pull up Infibeam, and Infibeam did advance by 14%. There were longs there. Balkrishna on the Industries, on the other hand, continue to show some weakness, and we saw shorts building in. But contrary to that, Apollo Tyres did also see longs, considering the underlying advance by around 3.5%. So some stocks to watch out for, but we'll also be watching out for how the indices do. But moving on, we saw it was the summer 2075 by clocking the best Diwali gains in a decade, after nearly wiping out all the gains coming in after concerns over high crude price and a weaker rupee, as Indian stocks enter the new trading year, which are the pockets of opportunities. Take a look at these markets, veterans, and what they are saying.
The way financial sector is structured in India till about 95, it was all public sector.
Correct.
Now all the public sector is being given, fortunately, permission to start the private sector bank, private sector NBFC, private sector insurance, private sector banking, private sector, everything, mutual fund, everywhere. But they were the dominant player till then, the only players.
Right.
So what is happening is that in every segment of financial sector, the public sector is going down and private sector is coming up. Everywhere else, like insurance and all places, they are healthy. But in banking sector, unfortunately, after 2008, the transition was very smooth. But after 2008, public sector banks, being the corporate lenders, predominant corporate lenders,
right,
they got loaded with the slowdown in the economy. They got loaded with a lot of NPAs, and they are not able to get over it. Still, there are problems. So, some 11-12 banks are under PCA, which is kind of a restrictive in terms of lending, where lending they can do, particularly the lower end of the society. So what that means is that economy is going at full blast. Your industry is growing at 15%, whereas the players are very few.
Some of these global businesses like casinos and perhaps liquor, which are made into India. Where do you stand on some of these?
I mean, those are some stocks that have fallen in this fall, and they look like good bets to make. So I think these are themes that I would be attracted to over the next 5-10 years, because they're great businesses, they're impregnable businesses. There's some great franchises out there. So whether it's in gaming or whether it's in liquor, whether it's in some consumption space, those stocks still look quite attractive to me.
And a final question, sir. We've spoken about some of these themes right now. Are there any newer themes emerging from your point of view at this point?
Not really, not overarching themes, but what has done in this fall has made individual stocks down 50%, 70%. In the sharp fall, we had a lot of correction. A lot of these stocks are unfairly being punished by the market. They trade at single-digit P's, handsome dividend yields, and have good prospects of earning growth over the next 2-3 years. So I would encourage investors to look for great businesses among them and go and buy them. And this is a good time to buy those businesses. So there's no overarching theme. It is just looking at businesses that have been unfairly punished during this fall.
Mr. Choksi, there is a question about whether or not you want to stay with the tried and tested names in the markets, or would you want to go ahead and venture out and perhaps take a little more risk with the relatively smaller names? How would you go about it, and what are you asking your clients to do?
Basically, my philosophy is that I first look at the industry, which industry is doing well, and out of that I will identify a company which is good, that is, and management is first thing, and financial and the growth of the company you have to see. But today the management plays a very big role, and I think I am rather going for a small company. I would like to remain with a mid-size or a large company, because they can withstand the adverse circumstances.
Okay, Mr. Choksi, then I have to ask you, what stocks are you recommending to your clients right now?
Basically, today we are recommending Deepak Nitrate number 1.
Okay.
Then Nosil is second number. Then third one is JK Paper. Paper industry is doing very well. So JK Paper is there. Commercial vehicle, Jamna Auto is looking very good.
As predicted by everyone, the Fed stood still in its penultimate meeting of 2018, but remains on course to hike next month. The policy statement notes economic activity rising at a strong rate and that the labour market continues to firm. It repeated plans for further gradual rate increases in the coming months. The FOMC added that risks to its outlook seem roughly balanced. The Reserve Bank of Australia has given an upbeat assessment of the economy, seeing stronger growth and hiring helping to spur inflation. The RBA quarterly statement on monetary policy reiterated that higher interest rates are likely to be appropriate at some point, but it says there's no strong case for a move at the moment. The bank also warned of the risks from the worsening trade war and a weaker China. The US is proposing barring immigrants who illegally cross the border from Mexico from being granted asylum. In a statement, the acting Attorney General said the Homeland Security Secretary say the current system is overwhelmed. The President has blamed US asylum rules for luring thousands of migrants a year from Central American countries. An official says Trump plans to issue a proclamation on Friday. Tesla's new chairwoman has triggered doubts that CEO Elon Musk will be reined in despite costly run-ins with regulators. Robin Denham is a Tesla insider, having been on the board since 2014. She takes on the role immediately and will leave her position as CFO and head of strategy at Telstra in Australia. Musk had been chairman since leading a $7.5 million investment in Tesla in 2004. Global news, 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
In the space of last 1 month, the crude oil prices have gone from soaring towards the $100 per barrel mark to slumping into a bear market. Crude oil futures on Thursday ended lower by 1.6%, extending its fall to about 21% from its October's high, fueled by accelerating U.S. crude production, highest OPEC output in multi-years, as well as waivers for some Iranian crude exports. With this oversupply situation looming, production cuts might be on the horizon once again, as OPEC ministers are set to meet this weekend begin to consider a potential cut in output. As far as the base metal space is concerned, barring nickel, all of the other names ended higher on Thursday, led by strong gains seen in zinc, which ended higher by about 3%, and nickel, which jumped about 4%. As far as the precious metal space is concerned, gold prices, they fell for a 5th consecutive day, its longest losing streak since July, on the back of strong jobs data, boosting speculation that the Fed will maintain its hawkish stance.
Yeah, it is a big U-turn from what the policy had been and what the policy changed to even just a couple months ago, because they went out of cut mode to let's pump all we can mode in order to bring the prices down, appease some of the customers, make the market more confident that there was going to be enough oil. And now we're seeing some forecasts that demand is going to be slower next year than it was this year. We've got concerns over the trade war, other currencies in consumer countries that are not as strong against the dollar, and that's hurting those countries' ability to buy oil. So these fears are causing OPEC to look and say, well, let's not put too much oil on the market. Let's not get ahead of ourselves. We don't want prices crashing. So that's really the impetus for this move.
Well, back to local equity markets. Bunch of news that we're tracking this morning. Dredging Corp of India, where the cabinet has given an approval to divest government entire stake in the company, which is as much as 73% as of now. Bharti Airtel, that's the second one in our list, given that Moody's has placed a Baa3 rating of the company under for a downgrade review on account of cash flow concerns for the company. Third in the list, we have Emphasis, where the company is set to acquire a US-based company for a $25 million acquisition. That's a new acquisition that we're looking at. And also Tata Steel, importantly, is expected to remain in focus, given that Thyssen Group has issued profit warning on account of the ongoing cartel investigation process, and also has lowered EBIT guidance for Q4 on account of the production and shipping issues around that region. Well, also we're tracking in Punjab National Bank, where the government has increased the stake in the bank by more than 5.5%, thereby upping its shareholding in the bank to around 72%. Goa Carbon, which has reported the monthly sales number. Also, we're tracking in JSW Steel, which has reported an 8% uptick in the production numbers. Well, two results that we're tracking this morning. First is MRF, which has not reported an encouraging set of numbers. Nevertheless, EBITDA performance is almost in line with what the street was estimating. If you look at the margins, they've contracted to 14% as compared to 16%. And if you look at Aban Offshore, that again is not good at number. The losses for the company have actually enlarged. If you look at the top line, 33% downtick there in terms of net loss, 38 crore as compared to 27 crore seen in the corresponding quarter. And also, if you look at the EBITDA performance, that's where also the losses prevail. The company has reported an EBITDA loss of 388 crore as compared to the loss seen in the corresponding quarter to the tune of 230 odd crore.
Well, it should be a steady quarter for Titan Company, starting off with expectations on revenues. According to the Bloomberg projections, we're seeing about a 23% growth year-on-year. Margins likely to remain flat at around 12.6% against 12.5% year-on-year, with profits which could rise 23%. We are expecting Titan to gain further market share at the expense of the unorganized sector, and we're likely to see about 17 to 30% growth in the jewelry segment. We are also expecting the share of the studded jewelry to be at about 35% of the entire jewelry sales. Watches segment is likely to see about a like-to-like growth of around 7% year-on-year, but we could see some quiet moves when it comes to the eyewear and the other segments on the whole. But it should be a good quarter, a steady quarter for Titan Company moving into today.
On the big brokerage calls for the day, first we have a CLSA and Voltas. So the brokerage has maintained its sell rating on the stock, but has cut the target price to 465 from 480. Now, according to the brokerage, The Voltas reported a weak second quarter earnings led by the biggest fall in its AC margins in the last 6 years. Now, aggressive pricing to clear inventories in a weak market, warranties, commodity and forex impacted the AC margins of the company in the second quarter of financial year 2019. Now, some of this was offset by a good execution seen in the project business. However, the brokerage believes that a stock with expensive valuations is not ready for such weak earnings, and this is the reason why the shares have underperformed of Voltas when compared to the market. Second we have is HSBC on Phoenix Mills. Now, the brokerage has maintained its buy rating on the stock but has hiked the target price on Phoenix Mills to 800 from 770. Now, according to the brokerage, the second quarter earnings of Phoenix Mills were operationally sound as its rental income and consumption from malls grew strongly. With 5 new malls under construction and existing malls growing strongly, the brokerage is expecting the company's rental income to grow at a compounded annual growth rate of 17% over the next 5 years. Lastly, on the residential segment, the brokerage says that the company has recorded an uptick in the sales momentum, but the numbers are still below their estimates.
Bring more women to the business. That is an imperative. It's true. 2% of women only are CEOs in the financial sector, and 20% executives are women.
Yeah, and we lost 3 this year in New York.
Waste of talent.
I think, as my old boss Christine Lagarde used to say, when things get really tough, they usually call in the women to clean up the mess.
Exactly.
I think it's our responsibility to get a seat at the table. So for me, having that power of voice is very exciting. I've got an 8-year-old daughter, and I really encourage her to do her best, have fun, have your say, and make that impact.
You cannot survive your occupational life just being a woman. You have to have something in you, and that is what counts.
Now, there's lots to talk about over the course of the day, and you will find all the live market action on Bloomberg Quint. But there are also a few stories that you should consider reading on our website, bloombergquint.com. Here they are. The Reserve Bank of India has liberalized the norms governing foreign borrowing for infrastructure creation in consultation with the government. Directorate General of Civil Aviation has asked Jet Airways and SpiceJet to take corrective action to address possible issues with their Boeing 737 MAX planes that could lead to a significant altitude loss, a senior official said on Thursday. And Netflix brought its checkbook to Asia. The streaming company announced a slate of 17 new Asian original series during an event in Singapore on Thursday, part of a pipeline of more than 100 projects being reproduced or produced in the region. And that's all you need to know as we move into trade. But up next is Indian Open, so stay tuned to Bloomberg Quint.